Hello and welcome to another episode of our From the Helm series, live here at the Resources Rising Stars Conference on the Gold Coast for 2025. I'm Grady Wulff, Senior Market Analyst with Bell Financial Group, and a name that really does not need any introduction, Tim Goyder, Chairman of Minerals 260. Now, I'm so excited to be joined by Tim today. It's been a massive transformational year for the company itself. Minerals 260 is an Australian-based mineral exploration and development company with projects including the Mora Project, Aston Project, and recently the Bullabulling Project. Tim, thank you so much for joining us today.
It's a pleasure, Grady. Good to be here.
It's been a huge year talking about transformational acquisition of Bullabulling, obviously, $220 million capital raise, major drilling campaign. Can you tell us about the journey and what the acquisition of Bullabulling Project for gold has done for the company?
Well, I guess when we started looking around for projects, it was when Luke McFadden joined us from Oz Minerals, and I guess Luke's skill set is more on the BD side. So we started looking at projects basically in Australia and the rest of the world.
Yeah.
And then the Bullabulling Project came across our desk, and it was a competitive bid process being done on that asset. The asset was owned by Xinjiang, ultimately the $70-80 billion Chinese company. And anyway, over a 6-month period, we negotiated a contract and entered into that contract on the 2nd of January of this year.
So very early start to the year.
Yeah. Well, I can tell you, we worked all through Christmas, and we didn't have much time off, and really that was all through December, particularly as full on. But you know, we looked at the project and we did a lot of DD over that 6-month period, and we could not find any fatal flaws.
Wow.
And I guess we wanted to be in the position like an investor to look at it and say, what can we do with our company? It's about growing a company, and we're on the path to do that now. Yeah. So it was a $30 million capitalised company, and we went and raised $220 million.
Amazing.
And I think about that now and say, well, God, how did we do that?
Yeah.
But look, it really came down to the asset.
Yeah.
Yeah. And ultimately, you know, we presented to some major institutions around the world, and we're very fortunate to have them on our register now.
And so with the Bullabulling Project, what was the biggest attraction for you? Is it the grade, the size? What was the outlook?
Well, look, it is in terms of historical grades, quite low grade. You know, it's a 1.2 gram ore body.
Yep.
And we bought the revised resource of 2.3 million ounces.
Yep. And
we paid $72 an ounce. So. During that process, when we were negotiating the deal, the gold price was going up $20 to $50 a night. Yeah. So, you know, it's hard to be too hard on the vendor. So, but as a businessman, and Luke and I looked at it, and we, you know, can we go 10 times our money here?
Yeah.
Can we build a $2 or $3 billion company? And there's no reason why we can't. But what we need to do is go and de-risk the project. Right? Yep. There's been 500,000 metres of drilling done there previously, predominantly by Resolute, in the late 90s and early 2000. And in fact, they mined, had an operation for 2 years when the gold price was $500 an ounce.
Wow.
And when the Bank of England went and sold the gold, they closed the mine down. And really, there's been very little work ever since.
Okay.
And the company went in the hands of Bullabulling Gold, which ultimately was taken over by Norton Goldfields.
Amazing. Now, talking about that gold price, it has been an absolute tear recently, hitting $3,689 an ounce today. How does that fare into your outlook, and what is your view on gold as a whole right now?
Well, look, you know, the forecasters all got their point of view, but at the end of the day, you've got to look at reality. What is today? Why is the gold price so strong? And, you know, it's I think it's two-pronged. You know, the world is worried about, of course, the US dollar and the US debt, and you know, the political situation around the world has never been you know, unpredictable so much, hasn't it? Like it's you know, the man in the street is buying gold, and governments and sovereign funds are buying gold.
Exactly.
So, look, I'm not that great at forecasting. All I know is that we want to have an asset which will survive in the cycles.
Yeah, exactly. And commodities are very cyclical.
Yes,
so it's a good thing that you're kind of de-risking in that way as well. The company has already completed a vast amount of drilling since taking over. You did mention that earlier. What has the drilling delivered? What grades are you seeing? Kind of lower grade, but are you really excited about the outlook?
Well, look, it's, as I said earlier, it's de-risking and de-risking the asset. Our results have been what we expected, and certainly the last set of results we released a week or so ago were very, very good. Cool. And we're seeing potential at depth and on strike on the project, bearing in mind the ore body is over 8 kilometres long, right?
Wow.
So historically, the drilling, there wasn't much drilling below 150, 180 metres.
Yeah.
We're now drilling down to 400, and we are having good success.
And on that note, you recently did make the decision to upside your drill program from 80,000 metres to 110,000 metres. Why did you do this?
Oh, well, look, the ore body remains open, right? And so, we've told the market we want to come up with a new resource in December and wrap the number around that, and I think that's going to be a big turning point for the company. And but we want to go on beyond that, and so our exploration results warrant further drilling. But look, quite frankly, I think we're going to have rigs drilling there on non-stop. This size of the ore body is going to demand continual drilling.
Absolutely. Now, from a development perspective, what lies ahead for the company in terms of once you do hit production? How big of a scale is that for a company like Minerals 260?
Well, aspiration-wise,
yes,
I like to be producing 150,000 ounces a year.
Yeah.
And in the lowest cost quartile. Yeah. So how we do that, we've really got to position the plant, the actual resource, the met. All those matters which we commonly deal with in a PFS, we need to do those really, really well and really, really tightly. We had a great team in Liontown, and that's what we did. We spent a lot of money on met, and the proof's in the pudding there, what we've done there at Liontown. So it's a similar philosophy we're going to be using. And we just appointed a really good young guy from Oz Minerals who's got fire in his belly.
Love it.
Fire in his belly, he's got a pulse, and he's looking after the studies.
Absolutely.
And he's hit the ground running.
That's what we love to hear, especially in the mining industry. What's the long-term vision for Minerals 260, and how do you see the growth of the company unfolding, especially over the next few years?
Well, I think it's very positive. Number one, we've got 500 square kilometres of ground there now. We've been on the acquisition trail. The closer we look at the geology, we believe that there's good potential on strike at depth, and also possibly parallel systems. And so we've got a lot of work to be really focused on that. And what goes beyond that? Look, it's all about growing the company. Okay, and we'll continue to do that.
Yeah, and you personally, talking about the shareholder side of things, you personally recently invested 15 million as part of a capital raise, and you're already a major shareholder in Minerals 260. Plus, you've attracted some pretty big institutional names, like we mentioned. Tell us about the support you've received and what investors are saying at the potential of the company.
Well, look, I guess I looked at it as an investor and thought, well, I can go, 7 to 10 times money. And I believe that, the Black Rocks, the Franklin Templeton's, Rest, Samuel Terry, they all are now substantial shareholders. Looked on a similar basis, right? Where can you find 2.3 million ounces in a company capped at that time? About $230 million, right? So they're on the journey with us, and we want to reward them.
And finally, Tim, for investors who are looking for that next hidden gem in the mining world, why should they consider Minerals 260 in your opinion?
Well, look, I think the facts are there. We've got a resource, historic resource of 2.3 million ounces. We're going to find more there, no doubt. I think, December we're going to have a resource update. But our market capitalisation, today we're about 350 million, I believe.
Wow.
But you look at similar projects in the mid-cap companies. Well, they're not mid-cap now, they're large. You know, some of those are going into the ASX 100.
Yeah.
And, you know, I guess we really respect Capricorn.
Yeah.
You know, those guys, what they've done at Carlawinda, you know, that's a similar grade, similar size deposit.
Yeah.
And that and their Mount Gibson project. So they have 2 projects. They're in production, producing 120,000 ounces a year.
Yeah.
But they capped at nearly $5 billion.
Wow.
So
huge upside potential.
Well, yeah.
Yeah.
Yeah, I believe it is, but we're not too carried away. We're just going to go and do our good work.
Absolutely, that's what we love to hear. Tim, thank you so much for joining us from the Helm here today. I really hope you enjoyed that episode of Minerals 260 with Tim Goyder. If you did, please be sure to subscribe to our YouTube channel to stay up to date with all insights, commentary, and of course, exclusive interviews just like this one.